Good afternoon. It's a 1 o'clock special. We're doing a little bit of a different time. I'm your host, MacKenzie Wilson. Thank you for joining the Alberta Shop Talk Show. This one's going to be a focused conversation around 2020, what we've seen, which has been unlike anything else, as you guys are always, as we're all probably well aware. And I've got my good partner in crime here, Brett Turner over at Redline Real Estate, joining the conversation. Actually, Brett and I had a few conversations over the last while about what we thought were going on in the market, and Brett said, "Hey, you know what? This would probably be a good conversation for the rest of the community." And I said, "You know what? That is a phenomenal idea." And so here's how the show came about. We had them on a few weeks back on one of our shop talk shows, but we got so busy answering frequently asked questions that we didn't fill in this other part of the show that we had prepped for, which was looking back over 2020 and then looking ahead to 2021 and what it has unfolded for our rental properties. So without further ado, I'm going to get Brett on here, get a little introduction going, and have this conversation on where we've been this year in 2020 and what we can look forward to. Brett, my friend, how are you doing today?
I'm doing really good, MacKenzie. Thanks very much for having me again.
Perfect. Awesome. Yeah, you know what? We had this conversation a few times. I was kind of picking your brain on what you thought was going on, and as we kind of got through that conversation, you said, "Hey, we should go to the group with this." And I said, "Phenomenal idea. This is really good information." Um, and we look at this year, and it's just like, wow, it's just a year that's unlike any other. Fundamentals are out the door, and we've seen some really interesting things. So, before we go down that stretch, though, for the people that don't know who you are, Brett, I know you are investment-focused realtor. It's why I've gotten the conversations with you and how we met. But for the people that don't know you, give us a little bit of a spiel on who you are.
Sure. Yeah, thanks for that. So I came into the real estate investing business as a real estate investor. I read all the books. And then I looked at the service industry. So being a realtor, I got my license to help my investing. And then I kind of got pulled into the industry because you meet somebody that, wants to trade or something. So that's sort of how I got my start. And it actually helped me leave the previous career that I wasn't too enamored with to enter into the real estate industry full time. So I sort of just kept working at it year by year. My niche within the real estate industry has always been selling investment property. That's always what I've kind of had the most passion for, and it's that type of business that seemed to find me year after year. And so I've been through all of these swings that our economy has had over the last 15 years that I've been doing this. And have since sort of progressed along with my career. I'm a broker now. I have been for 10 years at Redline Real Estate. And so we have about 80 realtors at our office here. We're also the only brokerage in Alberta that has a division dedicated to real estate investors. So we have about a half dozen realtors at our office here that specialize in that field. And I still am quite actively involved in that space, sort of helping real estate investors get into the industry, helping them find properties, skin deals, helping them build their portfolio, work with partnerships, all of that sort of stuff. And then we have a property management company, and that's sort of been the capacity in which we've had the greatest opportunity to engage with your members. And that our PM group largely evolved as a result of the deal flow on our investment property side. So I would sell property to somebody, and they would need a property manager, and that business sort of found us as well. And so that's been the evolution of our business. And now my role here is sort of as the broker. With that, I got to be responsible for all that. I solve a lot of problems, but I've seen a lot of situations, and hopefully my experience can help some of your members advance themselves in real estate in 2021.
Totally. And in this conversation, we're geared towards the landlord investor side of that conversation, which is always a bit different. It's a different lens than the typical buy and hold for families and things of that nature, right? When you're buying for personal use. So there's always a different lens, and you do a really good job of shedding that light there, Brett. So if I remember correctly too, you are still an engineer. You were formerly an engineer in your previous life before you got into real estate. So
I wear the ring. I went to school for 5 years to get this, and I went through all the trouble to get it, and I worked in the field for about 3.5 years. That's my background before real estate. I was an engineer.
So super analytical. So I mean, it's a really good fit for you when we look at these numbers. So, on that note, let's look at this year. What happened? I mean, let's state the obvious. COVID came in with a sledgehammer and changed everything we've ever looked at in terms of fundamentals in real estate. So paint a picture for us, Brett.
Yeah, this time of year, everyone is sort of doing their, well, what can you expect next in 2021? And we'll work into that, because I do feel that 2021 is going to be a very special year for the real estate investment community here in Alberta, and I'll work my way towards that. But 2020 was just such a game changer of a year that has really the swings that we had this year were unlike any other that I've experienced in my career. And even those much more senior to me within this industry have said the same thing, that, there's never been a year quite like this one in the past anywhere, really, that they can remember. And all industries everywhere have had to adapt to this, and the real estate industry was no exception. So the pandemic largely governs the 2020 conversation. There are a few other factors in this as well, though, that I think are keen, that are particularly relevant for Albertans. So why don't we work our way in with that, and then we'll go to the pandemic, and then we can talk a little bit about 2021, if that works okay with you. So.
Totally.
One of the things that are a key thing for Albertans in particular to watch, and this has really shown up in Q4 here of this year, have been the large, the consolidation within the energy industry. So this is something that many energy economists have been forecasting for a while, that we would see big takeovers, and we did see a few of these this year. And my read on this is, now that they are finally happening, with the Cenovus Husky, acquisition and all of that, and the couple subsequent ones from that, from some smaller but still very large companies here, is that the energy industry in Alberta is gearing itself up for long-term survival within a low commodity price environment, where scale has a lot of importance for that. And so to me, this is sort of the final indication, if you were ever waiting for one, to know that, the days that we had before in the early 2000s and mid 2000s and early 2010s of a growth economy that was oil and energy based, it's doubtful that we're going to see that. So I don't think that, if you're in a good job in the energy industry right now, be thankful for it. If you're hoping to find one, I think it's going to be much, much harder to do that. And anybody that hasn't yet made that adjustment to their business, well, in Q4 of 2020 here, we've seen that now, that the big players are eating each other up, and they're taking over, they're adding scale so that they can survive in a low commodity price environment. And we won't see just this plethora of smaller operators with a growth mindset that are less focused on operational costs and more on asset acquisition and all of that. We're just not going to have a return to that type of economy in Alberta. And this is a sign for me. This consolidation is a sign for me that those days are gone.
Yeah.
So it's sad, but I think this isn't news to anybody. We've been living this here in Alberta for the better part of 5 years now.
Yeah.
And that kind of leads into the second part here, which it starts with bad news, but the way that I look at it is that all the bad news taken together is actually a good news story for the tenacity and the resiliency and the toughness of Albertans in general. And it's just a part of our fabric here, that we can be on the mat and we can get up and we can keep doing that over and over again. And so when I was preparing for our meeting here today, and looking back at 2020, well, I found myself looking back even a few years to that. And if you go all the way back even to 2013 is sort of when the bad news sort of started for Albertans here. We had the flood in Alberta in 2013, or in Calgary anyway. That hit us here, and a 1 in 100 year flood we had at that time, that the property management industry had to adjust to. All kinds of properties were torn apart. This was this first sort of big thing with dealing with insurance and large insurance claims and uncertainty in that part that real estate investors in Calgary anyways had to adjust to. Shortly after that, in 2016, we had that incredibly unfortunate wildfire in Fort McMurray that did the sort of same type of thing for up north, a generational wildfire, never seen one quite like that before. But real estate investors then were looking at, well, it's a shock to the local supply. What does this mean? This other sort of event I have to deal with here. What does that happen, or what am I going to do with it? And the house I grew up in burned down in Fort McMurray. I was born and raised in Fort McMurray, and had to kind of watch somebody driving through my old neighborhood and showing me the foundation of the house that I grew up in is just sort of this charred landscape. And so to go from living a flood in Calgary and then seeing that in Fort McMurray after that was sort of tough. So we then had that.
Also in there too, we had and was it Cold Lake? We had that fire as well. A few, I can't remember when that was now too. I remember that being a pretty big deal as well. So we've been dealing with these larger and larger fires.
Yeah, and it's a sign of climate change and all of that. And, that sort of seems to be the big read on it. I'm not going to get into that. That's beyond my.
We won't go there.
We won't go there. Thank you. But at any rate, Albertans had to deal with this, right? We had to tough through that. And then it just sort of kept going for us here. In 2015 is when our economy got turned upside down with sort of this OPEC oil price war, where OPEC flooded our market with a whole bunch of oil to try and price out the U.S.-based shale producers, and Alberta was caught in the middle of this, and that certainly changed the way our economy had been oriented, which is around growth of the oil and gas industry. And that was the big shock for us that we had never really seen before. And all of the figures and everything we had to live through, 100,000 jobs lost and all of that was terrible. But when I look ahead towards what the pandemic was like, Alberta is already street tough from change. We have already had to deal with a lot of this sort of stuff, and I'll let you know my read on what this means for us, here in a little bit. But so we had this thing in 2015, and then we had new governments, both provincially and federally, that were also a big change for Albertans that we had to deal with an NDP government here in Alberta and a Liberal government, both of whom were nowhere near as, I guess, excited about an energy industry development as the previous Conservative government had been. And so we were left wrestling with a change in policy from a federal level and what that meant for our economy and all of the related uncertainty with it. And that carried on for years as we waited to sort of find out what would happen. We lost pipeline approval and projects were being slowed down. We had attacks on our industry from outside of Canada. That Vivian Krause documentary was exceptional and really shed light.
Oh yeah, she was awesome.
Oh, for sure it was. Yeah, she was
and then
great.
The other thing too, I'll give you a breather here, but I'll kind of chime in is we were so used to being in Alberta. I mean, I'm born and raised in Calgary, so I mean I can relate to everything you're saying here. Yep. Is when these ups and downs come, we'd always rebound quickly, right? It was like a 1-2 year thing. We'd be back on our feet and things would be full steam ahead, making new progress, more business growth. And this was a really big game changer. This last 5 to 6 years, just, okay, we're in a bit a different cycle. The cycles of the past that were quick and rebounds, this is different now. And we've really had to adjust, and people have had to take and adjust their finances for this very slow return to market, which we're still doing right now. We're not, we bottomed out for sure in the market, but we've never really climbed back to our 2014 numbers or any of that kind of growth that we've had since then.
Yeah, we're used to a cyclical market. I mean, there is the real estate cycle in it, and Alberta, it has always been very pronounced here. We've had very pronounced cycles in Alberta. And so, in the 2015 to sort of 2017, early 2018 period, the read was, well, we'll just do what we've done before and outlast this and survive for a few years. But we've now seen this as a reset on our economy here in Alberta. We are not going to have have the same type of economy to come up in that the investors did prior to us in 2015. It's just never going to be quite the same. But very few markets worldwide would have had what Calgary and Alberta did have in the mid 2000s. So it's not like people haven't been successful in real estate in market conditions like this previously.
It's just a different play now. We have to get used to.
Yeah, it is. It's very much an income-based play, a cash flow-based play. And your forum and your members here are highly attuned to that, because success in real estate here will be about achieving yield and getting the best income and cash flow out of your properties, and that will come from astute management and being on top of your tenancy relationships and all the great things that you go over here. So Alberta has changed here in a little bit, and what I look at, from the pandemic, before we get into that now, well, we had all these issues with our economy and all of these challenges and frustrations, and we have a minority government at the federal level now, and we're hearing things now with the election in the U.S. that Keystone may be canceled or revisited. Like, we're going to have to deal with this again here too. But then you throw the pandemic into the mix and what we went through in 2020, and it's sort of like, what is next for Albertans? What are we going to have to go through next? What are we going to have to live with that we haven't lived with already here in the last few years? And
and to add on that too, I was just thinking here, Brett, I know we just heard, was it Husky and the Synovus that's doing their merger right now? So going back to, businesses are consolidating to get into a more strong position to get in tune for the slower growth and to be acclimatized for that. And I also just heard on the radio here a few weeks ago, or I can't quite remember when it was, but a lot of companies are still moving forward with getting rid of or reducing their plastic use, or single plastic use, or banning that. So, which is kind of interesting too. But I'll throw it back to you. I've got some interesting things. I think they're going to relate more to the COVID side. So I'm interested to hear how you're going to shape this conversation.
We've done a lot of talking about the pandemic here this year. I was trying to maybe remind Albertans of all of the bad news we've had to live with before the pandemic, and then now you get this thrown on top. And so first off, I'd like to say we are tough. And so any of your members that have made it through all of that, pat yourself on the back, guys, because I don't know of a more challenging economic environment to have been in the last 5 years, other than, some disastrous turmoil or a war or something like that. But in terms of just the economic hardship and uncertainty that we've had to face here, any landlord that's been able to keep their portfolio together, keep themselves above water, we haven't achieved gains here, but I can assure you the toughness that you have built and the experience that you've gained in the last 5 years will position you well for the good times, which I do feel are going to start here next year. I do, and I'll jump into that here in a little bit. But we are tough now here in Alberta. We've been through an awful lot, and when you look at it, we really haven't rolled over. Like a lot of prognosticators that are external to the Alberta economy were calling for us to have this look like the next Detroit. Like the last person to leave Alberta, please turn out the lights. Well, that has not been the case. That scenario has not materialized. We've continued to achieve positive net migration to our province, aside from a couple of years right after 2015. And so we continue to see population growth in Calgary, the market I'm actively involved in, and also Alberta in general. And so we made it through that without having everybody, leave our province as many people were calling for. And prices have come down in the major centers in Edmonton, and in Calgary, but they've been modest. They haven't been double digit. We haven't seen this 20% drop in prices or anything like that that's happened. What we did see was a lack of transactions. And so what people did and what investors did is they stopped growing their portfolios. They stopped, actively trading up, in real estate like families would do. You buy a small townhouse, then you trade up to a starter home, and then you buy a bigger house with the equity that you've gained. Well, when there was no equity to gain, people just stopped trading up in real estate. And so we saw a lot of consumers retreat back into survival mode, which was the prudent choice to make at that time. And we saw transactions come way down, but we didn't see pricing sort of bottom out anywhere. The core of the market, in particular in Calgary, the detached segment that hovers around the median sales price of around 500,000 here in Calgary, that has stayed about the same. And we have not seen, maybe it would be 3 to 4% or something like that we've given up in that segment of the market. And so we've had less transactions, but the pricing has been maintained. So asset values have largely stayed stable through such an incredible time, which I actually think when you look at all of that, that's a good news story, is that, we minimize the damage that way, right?
Definitely. And I want to riff on that, on what you're saying there, Brett. And one thing I noticed, and so most of us on this investor, on this landlording group, we have typically entry level products or something close to that, right? I mean, for sure, there's some
cash flows, right?
Yeah, that's what cash flows, right? And for sure, there's gonna be some folks on here that might have a unique play and an executive style rental or something else, and there's for sure those as well. But the majority of us are somewhere in this range of the entry level product. And when you break down these price decreases we've seen over the last 3 to 5 years, sure, we saw, I don't even know, you know better what the numbers were we decreased, and was it 5, 10, 12%, wherever the prices came down over these 3 to 4 years. But when you look at our area that we play in, that demand never went away because it's an entry level product. There's still tons of people want to get in the market. You look at the millennials and our age group now starting families and whatnot, and I'm no exception. I've got a 4-year-old and a 1-year-old. They need places to live, and they can't do that in a 1 or 2 bedroom apartment. Yeah. So that demand actually never went away. But when you look at the average decrease across the city, well, we're looking at all the different segments and the luxury products as well. But from an investor side, we did okay. Things just kept on moving forward.
You're absolutely right, and that's what's so important, to just read behind the headlines, or look beyond what that first level of media is shoving in front of our face all the time, to actually get the real story of what's happened here. And it's hard for somebody like me, because I need a smart audience like yours that can understand that. And if you're a generalist, you might look at it and say, well, Calgary prices have come down. Well, why have they come down? Well, the main reason is we were in a growth market for a long time. People were trading up. We had more and more valuations and more sales in the 800,000 and above range. And those started to evaporate after 2015. We just saw a lot fewer sales at those higher price points. And that is what contributed to the values coming down significantly. Yeah. But that core part of the market, where most of the volume has stayed relatively similar. And any investor that has added property in the last few years would tell you that pricing has changed a little bit, but not a lot. And in the investment property space, that is the stuff that cash flows, and investors were achieving cash flow and have been achieving cash flow for years. And as a result of that, they're not giving their assets away, right? They're not giving away. And I don't think any investor should have that fear factor heading forward as we look into 2021 either.
Totally agree.
So yeah, that to me, the looking back on 2020 here, before we just touch on the pandemic, I don't want to spend too much time on the pandemic because we've been living and breathing it for so long. But the main takeaways for me on this were that, number one, people value the roof over their head. And that is what is so important to everybody. It's a basic necessity of life. And it was the same for consumers, and it was the same for tenants. When we're being told you need to go and stay at home in order to socially distance yourself from everybody, that roof over your head and the space between the walls that you're living in, that becomes so much more important. And our product as landlords, which is the space between the walls of the properties that we own, now is so much more valuable, because we're being told to spend time there. People are being told to spend time in that. Their consumption spending on meals out, travel, tourism, all of that stuff has gone away. People would like to do more of this, but we haven't been able to do as much of it this past year because of pandemic protocol. And so by extension of that, where is our time and our energy and our money going to be going? Well, it's in the real estate and the consumption real estate that we have. And so that is good news for real estate investors. And when I looked at, how other than the very first month of the pandemic, right? That very first month, I was freaking out like many people were. Are all my tenants going to make rent? Are all my clients' tenants going to make rent? That was what we were nervous
No one
about.
knew, right? It was all new ground, new territory for all of us.
Yeah, nobody really knew. We did have the government did the right thing and pumped a ton of money into the economy here to keep things moving, and people did what they were supposed to do with that, which is make their mortgage payments and make their rent payments. And so we did not see a huge rush in delinquencies. There were a few of them at the beginning, but generally speaking, almost all of our rates stayed about the same. Our vacancy rates actually decreased a little bit during the pandemic time, and our payment rates improved. We also found that, generally speaking, if you're a good landlord and if you have built goodwill with your tenants, then you can negotiate with them in times of crisis, and you can do just fine as a result of that. And so, in early in the pandemic, we had to go to all of our tenants and ask them, how are you feeling about making your rent over the next few months? What does it look like for you? And actually have a real conversation with them, because these are real people, right? They're not just paychecks on the first or rent checks on the first each month. And if you treat them like clients rather than tenants, you will have a better experience as a landlord. And we certainly observed that this year. The amount of tenants that we had that were so appreciative of us opening up to them and talking about making arrangements, they then made fair arrangements with us that they honored. And that was a key thing that is my takeaway from this.
The communication, 100%.
Big time. And so one of the changes we're making heading into 2021 is we are going to be a lot more proactive with engaging with our tenants. We're doing move-in gift baskets now. We're doing more check-ins early in the tenancies to make sure the property is working well, make sure their experience has been good. And it's to set yourself up to avoid all of the drama and all of the crappy situations that many landlords that can get into if they try and manage it from like this historical landlord, overlording on their tenants, right? It's just, you'll get burned out as a landlord that way. And I don't think that is the style a landlord should be taking in Alberta heading into 2021 either.
Yeah, and I'll just add a couple things in there for you. I was thinking this too, is right. We got forced to work from home. The ability to spend money elsewhere basically got shut down as of our, no restaurants right now, which is just still mind-boggling when you think about that. But we've been living that now for a better part of a year, and a play for people. It really served people well if they had more than a one-bedroom unit. You got to have room for people to work from home now. So if you have an office nook or a place to put a desk or a laptop in, fortunately, there's a lot of jobs now that have that flexibility they can plug into the internet. They can perform that job pretty much anywhere. So that really bode well for the landlords that had the space to accommodate that stuff. I mean, both my products are all 3 and 2 bedroom and up. I don't have any 1 bedroom units. And I think in the long-term play as well, we've talked about this too with the millennials coming in and want to start families, having rental products that have at least 2 bedrooms or more will do longer in the long run, because it's a bigger market to market to. So yeah, it's just a certain adjustment there. And like you said, I didn't see my vacancy. I had collected all rent so far. I had a few that had to push payment maybe a week or two in the month, but I had good communication with everyone, and everyone stayed on board because, like you said, we provide a basic need, and we all need a shelter over our heads, especially in Canada.
100%. Yeah, and that's just something that I think a lot of landlords kind of took for granted. You get into the industry and my tenants are going to pay me rent, well, we have a product and a service that we provide here, which is to give somebody a great place to live and then serve them as an attentive landlord, so that's part of that's part of our corporate culture here at Greenleaf. We've really tried to get closer to our tenants here this year. We were kind of forced to, and then we had the benefit, sort of the silver lining to this this whole cloud, is that now the tenants were worried. They were worried they were going to get evicted or kicked out because they couldn't pay their rent, or something was external to them that they didn't have a chance to control. was happening to them now, and we had a chance as a landlord to come in on, wearing the white hat and work with them and engage with them and get closer to them. And because of that, our relationships improved a lot, and our landlords are better taken care of now. I'll also go back and just briefly on this, our business is to take care of our landlord clients, so the people that own properties and hire us to manage it are our clients. So we went to them and said, you need to be ready to make arrangements with your tenants here. We really hope that you don't take a hard line with this, because this is an unprecedented time. And the response from the landlords within our book of business was overwhelmingly positive. Yes, go and cut the deals you need to cut to keep the tenants in the property, keep them safe, keep them happy. This was surely made easier because of options that were there for mortgage deferrals and all of that. But generally speaking, I found the landlord community did all of the right things, and people were good people when it would have been really easy to be a bad person during this time. My experience and my takeaway is that we're kind of all in this together, and if you carry yourself into bad situations with the right attitude, you can still come out of it as a winner. And that was our experience in 2020 this year.
Yeah, and my additional add-on to that, and we look at the provincial governments and how they each kind of looked at the pandemic a bit differently. I have to give kudos to Alberta and what they did for us. And we had phone hearings for RTDRS. We had no backups. People could move very quickly, other than that one shutdown period of, what was it, 2.5, 3 months? I can't quite remember how long it was, from April, May, and going into June, I think it was, where you couldn't evict. For non-payment.
Couldn't evict for non-payment, right? Couldn't evict for non-payment of rent, right?
That's right. But everything else you could, right? So they just did a very tactful approach, and they said, hey, as long as you guys work in communication, which I think was totally the right thing. It's been our success in this group. We've got great communication. People are sharing questions. Brett, you said you guys did very well with your clients by opening up the communication with both the landlords and the tenants. And we look at, oh man, you look at Ontario right now, and I'm still reading articles that they're 8 months behind getting a hearing to get an eviction going. 8 months. Like, that would destroy a lot of these small, and myself included, mom and pop landlords. I couldn't take 8 months of damages and non-payment of rent. I don't float that kind of bill.
It's Alberta is a great place to be a landlord, and we have it really good here. And for any of your foreign members that are like, oh man, how do I stay in this business, or how do I do it? We'll be thankful that you're in Alberta. And not in as highly regulated environment, or where rent controls exist, or all of the bureaucracy that does exist in some of the other markets in Alberta. And I was happy when the pandemic could have been a time for more governmental control over this. We were worried that this was going to be the time. Okay, now we're going to see more calls for certain things, and that hasn't happened yet either, which is also really good news. So as landlord communities, it's in our best interest to, if we want to keep it this way, to continue to be fair to our tenant, to continue to just use the system that exists here and use it the right way. Because if you don't, and if the government feels they need to step in, and if there's too many sad stories, then they will look at what other provinces are doing, and we may end up having to emulate them. And so let's keep using the RTDRS. Let's keep doing things by the book to ensure that we can maintain this more landlord-friendly regulatory environment that we have relative to our peers in other markets.
Totally. The only thing I think an add-on to just this whole COVID thing is, normally you need market growth to eventually raise rents and job and all that stuff, and we didn't see that this year. We saw, of course, a bit of the opposite, and I was actually still able to raise rent on a few of my properties. So I saw, and we did talk about this offline the one time, Brett, is a big shift of folks saying, you know what, I'm scared. There's a lot of trepidation in the market. I'm going to get rid of my biggest bill every month, which is that mortgage payment. And we saw a shift of ownership come back into the rental market.
Yes. Yeah, absolutely right. Yeah. And that's been something that is a trend that I think we will see, although it may end up changing a little bit heading into 2021. That's something I'm going to watch. But certainly in the last few years with our economy in Alberta, more and more people have found themselves on the bubble of making their mortgage payments, or have had to move around for work, or find different work in different places. They've moved away from owning and into renting. In that sense, we've just really I wouldn't say it's a change in our economy here. We've really just more normalized relative to other markets. Calgary, Alberta in particular, and Edmonton is a little bit less, and some of the rural communities are lesser still. But in Calgary, at least, we've typically had one of the highest incidents of home ownership in the country. And heading into 2016, which was the last Government of Canada survey, we had about a 69% of all consumers in Calgary anyways, owned their property rather than rent. And that has since migrated down now to, I think, about 64% was the last stat that I saw. And in some more mature markets in Canada, that hovers around 55% or so. So we're moving down there, but it's not like, it's a big sign for our economy here. It's really more just we're settling in, we're becoming more mature, and we're not growing at the same pace that we were before. And so we're seeing a bit more of that happening. Now, heading into
great from our perspective, being in the rental, the cash flowing market, right, with properties, because our prices have come down on properties. Rents generally have stayed the same or increased in a few cases. Again, we're speaking from a Calgary market, so please keep that in mind. But it's gotten better to get cash flowing properties because the opportunity, there's more of them out there now. I guess where I'm going.
Absolutely, yeah, for sure. So 2020, kind of in recap, my takeaways as a landlord here in Alberta: get closer to your tenants, treat them as clients, treat them as customers, don't treat them like a rent check. And that's the way to build longevity within this business. If you've got good real estate in the right areas, you'll continue to stay full, is another main takeaway that I have. And then the resiliency of our marketplace and the confidence that I feel buyers can have now, having weathered all of these crazy storms. It's like a never-ending hurricane or cycle of hurricanes like we've had here. And to come out of that at the end of the decade, without having, rolled over and died here in Alberta like many thought we were going to, I think it really does bode well. And you could say that we have very low downside risk in Calgary, at least, or in Alberta right now, and a lot more upside potential. That's my
I would agree with that for sure. Where all patch isn't going anywhere. You still need petroleum products for a number of things, sterilization, healthcare, all that kind of stuff. Petroleum-based products, they're not going anywhere. Electronics. We still are like 98% dependent on fossil fuels, at least in Canada, anyways, for heating, energy, getting vehicles around. So,
it's not going anywhere. It's just not going to grow, right? So it's still going to be there. It's still going to really support our economy. But it's not going to be the
explosive growth.
Those days are gone. Yeah, they're gone for sure.
Yeah, totally.
Okay, so 2021, and what do we have
Let's get to it. What's going forward here?
Right? Yeah. Let's change the page. What do we have to sort of expect? So the pandemic taught me a few lessons about this that I think investors should apply and should watch for heading into 2021. And the first biggest one to me is going to be a change away from condominiums and a reversion back to growth within the single family market space. So Alberta has had a very soft condo market for a long time, but condos are very popular in other parts of Canada. And when you're in a growth market, condominium product serves to lower the cost of admission. Like, you can get into the market by buying a smaller condo. And Calgary and Alberta in general did experience that in the mid 2010s. And so we have this glut of condominium supply that's on the market here. And I feel that the smaller condominiums are going to be very poor investments for Alberta landlords heading into the future here. I just think that segment is overbuilt, and the likelihood of seeing price growth is going to be really hard, even in a recovering economy. And also,
small, can you, like, are we talking square footage? Are you talking number of rooms?
I'm talking square footage, like sub 500 square feet. Some of these micro units we've seen, or very small 1 bedroom, 1 bath units that are, under 600 square feet. That those types of basement suites that are like that are going to be tougher to keep full. And size never goes out of style. And in the market that we're in right now, the economy that we're in right now, and just the way that people consume real estate right now. You mentioned, MacKenzie, that you've got no one bedrooms, you've got two bedrooms, and your two bedrooms are going to be much more in demand because people need more space. We're spending more time in our real estate. And if you're in smaller units, and you can afford to get out of them, even if you're not making a lot of money or you're taking a modest loss, I really do feel that you should look hard at that right now, simply because for two reasons. First is, going long as an investor for you, I don't think you're going to do as well with them. And the second reason is interest rates are so low that now that tenants are going to have a chance to maybe get into the market when they might not have been able to before. And these units can do what they were intended to do, which is make real estate accessible for people. And you might have a better market to sell into here coming out of the pandemic, when all this government money has been in the system and employers are still receiving funds from the government, and interest rates are so low. It's probably a good time to unload some of those smaller properties that you have, if you've been thinking about it.
Totally.
And so that's one thing in 2021, particularly the Q1 of 2021, that I would recommend to Alberta landlords is get out of your small suites while you can here, while the getting's good.
Okay, good to know.
What else? What I say? So the lower interest rates also now for Alberta landlords is really important for two things. For one, it is stabilizing your existing portfolio. So if you're in higher rates right now, and if you signed up, if you're paying anything more than 3% at present, for sure, you need to do the math, or you need to contact your bank and ask them, what can you do for me with the mortgage that I have right now? I had a client contact me last week saying he got a letter in the mail from his bank. This was RBC. And they said they offered him a new fixed rate mortgage if he signed up for a new 5-year term. And he was only 2.5 years into his existing 5-year term. Fixed rate, he was paying right up in the high 2s, and it was a good deal for him at the time. But RBC came to him, was proactive. They want to preserve this market share because they know that rates are so low right now and people are shopping around. And so I do feel that early into 2021, particularly, before we start to see vaccines getting out all the way out there, before the economy starts to really get its legs here again, now is the time to be having those conversations with your banks and taking advantage of their motivation to retain your business, and doing that. So if you have,
I can add on to that too. I'll do my take. So I'm doing one renewal right now. I think I'm going in at 1.79. I had an offer on my original mortgage to renew back at actually 1.59. He came back and called me back for 1.59. I'm at 2.4. And if I went with that 1.59, it'd free up additionally each month $222 more of cash flow. So when you look at from a landlord perspective, cash flow is king, right? Because if you guys get a bunch of cash flow, you can still lump sum payment on that same mortgage to get the same kind of buy down with a higher principal payment. I mean, people are like, oh, I don't want to get a 30 or 35-year amortization mortgage. I guess 30 is more common now than 35, but they don't want to do that because it prolongs paying more of that interest. But in this game, you want the cash flow, because that cash flow gives you the tools to maintain the property. It gives you the breathing room to lower your rent to stay competitive, to keep the vacancy down. And so the tools you need to run this business. And if you are getting all that cash flow and you want to keep your mortgage, you want to pay down your mortgage just as fast, use those other tools they have in the product for doing lump sum payments or top up payments or whatever it might be. So yeah, like you said, 1.59, and that's a $220 change, and I hadn't changed anything with the property. It's the exact same property. I mean, that's a huge advantage I'm looking at right now.
100%. Mortgage payments will be the single greatest payment most landlords will make. It's not the greatest cost. The greatest cost is vacancy. You want to keep your units full. And one of the ways to do that is being as competitive as possible with your rent rates when it matters. And if you can take less than the next guy can, then that makes it easier if you have to do that. But right now, I do feel that it is a I don't. You can't call it a buyer's market for mortgages, I guess, a borrower's market, so to speak.
There
But
you go. Yeah, yeah,
yeah, maybe we coined a term there. I don't know. But
yeah,
anyway,
exactly.
go and work with your bank now and get it now, like early in the new year here. If you haven't yet, and if you're paying high twos or low threes or wherever, reaching out to them and saying, hey, I'm hearing my friends in the industry are getting super low interest rates. They can buy with something much cheaper than I'm paying right now. Other banks are sending them letters, making them offers. I have to look at this. I'm asking myself some questions. What can you do for me? And then see what your bank comes back with. And I bet you that there is some loose change in the couch there that you can go and pick up. And it's not going to cost you nothing but the time on the phone. And a little bit of assertive language and tone with them, and I suspect you can do quite well. And so early in 2021, get the most efficient financing that you can and take advantage of the market condition that we're in right now and get the best possible rates that you can.
Totally. Love it.
It will also, not only will it like make you more money, but it will make it easier for you as a landlord to qualify for more investment properties, right? So if you've got lower mortgage payments, and if you're doing all of the right things, yes, then it will reduce your debt service ratios when you go to get qualified. And so if you like the landlording business, and if you would like to be a bigger landlord and grow your portfolio, well, then you need to have you need to run a tight ship. And yeah, you got to get cash flow, and it will really help your buying power as you head into next year. If you want to take advantage of some of the incredibly low rates that are out there right now. Sub 2% is hanging around if you're a CMHC insured, or low 2% range for new deals right now. I just bought a condo in Kelowna and I got the 2.02 or something like that for this. So, it was they're out there to be had, and you can only qualify for them if your numbers look good, and your numbers look better if your existing portfolio is efficiently financed.
That's a huge takeaway. I want to recap that. So what Brett's saying, which I just totally dawned on me in this conversation, you can click, but if cash flow is king, if you can do those debt servicing ratios and those numbers and your DCR and all this good stuff, the more money you can show you're making with your properties, the more you're able to qualify in the future. And a change of 50, 60, 80 basis points will make a huge positive impact on your portfolio. So if, like what Brett said, if there's an opportunity to maybe break or do a 3-month interest payment to get out, you run some numbers, that may serve you quite well in the long run.
It would be worth it for you if you want to grow. So if you've maintained liquidity, and if you have a growth mindset and you want to add a few doors heading into next year, then running the numbers with your mortgage broker right now. And if you need a good one, I can refer them to you in many different areas in Alberta. But what you want to do is do the math. Is it worth it for me to pay out my mortgage at present and take a modest payout penalty in order to get the benefits of a longer run with a better mortgage rate, and then also the purchasing power that I would be able to achieve if I'm buying something else, right?
100%.
Right. So do that math. Take the time to go and position yourself to be ready to buy, have your powder dry and ready to go. And I think you'll be really thankful that you did. Okay, more kind of reads on 2021 here, in particular for Southern Alberta and the Calgary area. I'm not ready to say that we're going to see increased pricing yet, but I do feel that we're going to flirt with it with certain asset classes this year. And the reason behind that is in Calgary in particular, in 2020, we started the year pre-pandemic with much more buyer interest than we had in 2019. Then we went through this big lull for 3.5 months or so as a result of the pandemic. And then in October, September, we had that same gap. We had that same greater showing interest, greater sales volume than we had previously. And in each of the last 3 months of 2020 here, we've had more sales than we've had at the same period in 2019. We've had also a reduced months of supply metric. So for those that aren't familiar with it, months of supply is the easiest and best barometer to take about how fast a market is moving wherever you're looking at real estate anywhere in the world. And it's what I use as my personal favorite stat to find out for myself, how busy is this market right now? And what it means is the amount of months that it would take at the current pace of sales to sell through all of the existing inventory on the market, okay? So the pace of sales relative to the amount of listings that are out there, that gives you the months of supply that you have. And generally speaking, if you're at 2.5 months worth of supply, you're in an even market. You're in a balanced market. If you're more than that, you're in a buyer's market. If you're less than that, you're in a seller's market. Is sort of the way of how it goes. And so in Calgary, anyway, in the real guts of our market, that detached space, we're at like 2.7, 2.8 months of supply in these last few months of the year here.
Flown above it right now.
Yeah, we are, and I think that is a sign that we are going to be in a balanced market for 2021, and that will be if I had to put a prediction on it, that's where our year is going to look. We'll be very much balanced this year. It's not going to be as much of a buyer's market as it was before. Buyers will find themselves in a more competitive environment because of low interest rates. There will be more buyers that are out there that are shopping around. There will be some of the sellers, all of the panic sellers that were in our market have largely gotten out already. They did that a few years ago, and so now it will be the ones that are choosing to sell is what we will find. And so I think we can expect a very balanced market heading into 2021, particularly for investors. Although investors may find that it is a seller's market. If you've got good quality product that has 2 bedrooms in it or good size with your suites at present, because of the rent to price ratio in Alberta right now and the interest rates and the cash flows that are available if you buy right, if you're an investor, I think that you may find that you'd be looking at a seller's market, as we head out into the guts of the year, that spring to summer market period. I think you'll find that you may get better numbers for a sale than you did, than you might have had last year, simply because of the interest rate environment that we're in at present.
Definitely. Yeah, I'll give you a break, and I'm just thinking too. I mean, so we're going into 2021. The biggest topic for conversation for sure is this vaccine can reduce the pandemic. Can we return to some form of normal life, right? So that impact might hit us in Q2 mid-year.
Even if it does, it's never going to be the same. We're still going to be meeting people on Zoom. People aren't going to want to drive. People are going to be antsy about it. Not everybody is going to be vaccinated. Not everyone is going to want to get vaccinated. So this sort of lingering pandemic hangover will be around forever, and our industry will never quite be the same that way. They'll be doing more Zoom meetings. You won't be doing as many in-person showings. Your marketing for your tenancies is going to matter a lot more, because you will find tenants that will pay more attention to that, and will get out of the house and put on their mask to see a well-marketed unit that they feel good about, rather than a fantastic unit with terrible marketing. They're not going to go and take the risk and go out there and do that. So some of those lessons need to be learned by landlords to have a really sharp online delivery and sales process if you want to maintain your occupancy levels.
For sure.
And that's something that even with a vaccine, it's never going to change. Cool.
Well, hey, that's good to know.
For Calgary-based investors, if I can, I know I've been talking here for almost an hour here now, but a few things to watch for, and this is something that Calgary can serve as a roadmap to the rest of Canada for. And I wrote an article about this in Canadian Real Estate Wealth magazine. And my point there was what we experienced in 2015, 16, and 17 is largely going to be observed, in my opinion, in many municipal centers, even across the world. And that is less pressure on real estate near a downtown core. We're just going to see more people working from home. We're going to see more people not wanting or needing to commute, employers not wanting as many people in their offices and jamming them all in there. And so we're not going to see as much of this sort of downtown core type of feel. The last sort of the last 3 quarters here have led to employers and telling people to work from home. You don't need to come be here in the office. Office levels have been way less in most places. I think that is something that's going to continue. And so real estate that had been priced and sold because of its proximity to the downtown core is not going to be evaluated in the same way as it had been previously. And Calgary will live through this. We went through this when we had our change in our economy in 2015, 2016.
Yeah,
the infill market, the infill market in Calgary dried up. Those old bungalows with 3 bedrooms up and a 2-bedroom basement, illegal suite with a detached garage that people rented separately, that they let rot, because they didn't want to do any renovations to them because the play was to tear it down and sell it to a builder or developer. Well, that play isn't there as much anymore now. And I don't think it's going to be there in the same way that it was before. Other cities will experience this in the same way that Calgary did, which leads to my next thing to watch for 2021 is an increase in action in the suburbs. And in particular, the first sort of wave of suburbs. So if you look at Calgary, and if you're familiar with the Calgary market, and many communities in Alberta are kind of the same way, properties that were built kind of prior to 1975 or so were sort of this bungalow style, right? That's what people wanted. They didn't want a lot of stairs. They wanted cheap houses back then. And that started to change to the 2-story type of plan with a more open concept plan and more square footage. Well, some of the best suite development candidates in Calgary right now are properties of that late 1970s, early 1980s vintage that have the square footage and the size, but need to be made over. And they're in suburbs like Beddington, they're like Cedarbrae, like Woodbine, and you can pick them up at great prices, and you can add value to them by doing smart renovations, legalizing basement suites, and they're in that nearer kind of suburb that for a long time was a no man's land. But now I think that's where the value exists for smaller landlords that are out there that are looking to go and add supply in areas where people want to live, that are near shopping centers, near all of the new amenities that people want to experience.
And that's also like a 15-minute drive ring of the downtown for Calgary to give people perspective if you're not from Calgary.
Yeah, and that same thing would exist in many urban centers, that sort of trend of suburbanization that we've seen. And Calgary, it is one of the sort of most sprawled out municipal centers in North America. And again, I think you can look at Calgary as a guiding light to what other markets are going to become now, because people want more square footage and they don't want to pay a lot of money for it. And Calgary has a lot of product that is in that kind of category right now that would be good for investors to take advantage of.
Yeah, and you kind of got me thinking here. So my background, I did IT. I got 2 diplomas, 1 in IT, and I remember reading these predictions in the IT market. This was in 2008, 2007, and around there. Or we're gonna have this ability to work from anywhere, which we do now. You can VPN, do a lot of stuff, and they're saying, no one's going to want to go in the office. And of course, that's not the case. We're very social creatures. There's always going to be that need. But I think now this pandemic's pushed people and it's forced people to become comfortable with technology, comfortable to do a Zoom call, comfortable to do this and that, where they would normally just do it face to face. So with more of the population being comfortable doing things remotely or using some technologies to augment their day-to-day business, you're really hitting on a point there, Brett, where you're seeing this emphasis of I don't need to be close to the downtown core. I don't need to be close to the job site. These other areas that are just simply nice to live in, that kind of push up in the real estate where if it wasn't close to any kind of economic driver before, it kind of suffered. Now it's like, well, a lot of jobs out there can be done anywhere, and you might see these trends like more living where you want to live, as opposed to being near a job that serves you, that pays your income.
People will go back to offices, and office culture will return because many employers are seeing the other side of the coin now. Initially, there was a lot of positivity around it, but there's inefficiencies that are resulting from this too. Lack of mentorship and bringing people up in the business because you can't rub shoulders with somebody. So you're going to see people going back to offices, but it'll be in a different way. So, for example, my office here, we do meeting days where, we need everybody in for meeting days, right? When you can be in an office and, provided that you're following all of the required protocols. But on those other days when you're really just parked at your computer doing your work and you want to be left alone to produce stuff, well, that can be done from home. And so you'll see less importance with this. You'll see more businesses sharing conference rooms, having a smaller footprint and all of that. So it will not be as important to be right on the scene as it once was. And anybody that is in real estate there, you will that's right downtown. That is something else for you to consider getting out of before it starts to become more pervasive and you see it everywhere else.
So we got our first question here. Let's Sammy's going to throw you a tough one. Look into your crystal ball. Any predictions when Alberta will be back in a boom market?
Yeah, you bet. I don't think we're far from it, Samuel. I'm calling for a balanced market in Calgary this year, and that's a prelude to a seller's market and a growth market heading into 2022. If the restrictions come off and we start to get our economy moving again, and my reasoning for that isn't so much about what's awesome about Calgary and our market here and Alberta in general, but because of how affordable we are relative to other major centers, right? So Vancouver, the GTA, lots of immigration, lots of people moving there. They're there now. They're driving up the pricing of the real estate. Now that they're here, we're living in a market where you can work remote. Like I have people that work for me in Calgary that live in British Columbia, and we're supported by a team that's based in Ontario, right? That type of stuff is going to happen more and more often. And so people will come to where they can have the best lifestyle. And I think that they're going to get a lot of value in Alberta. And I think that we're going to start to see some of that near the tail end of next year as purchasers and consumers ask themselves, do I feel comfortable buying and spending over $1 million to be in the Lower Mainland, or spending hundreds and hundreds of $1,000s more for a comparative home in the GTA area than I would have to pay for in Alberta? Am I coming too late to the party, and am I going to be the one left holding the bag if their market goes into a downward cycle? I think that you're going to see a lot of people asking themselves that question and taking the stance that Alberta has a lot less downside risk because we have a lot less equity to give up than some of the other major markets will. So balance for 2021 is my plan this year, is what I think is, or my prediction anyway. But I do feel that it's safe to start to use greater than 1% market growth forecasts heading past 2022 and beyond.
And the one thing I'll take that backs up to what you're saying there, Brett, is do you remember Amazon had that competition across North America where they're going to put their headquarters? It was Amazon. It was Amazon. And Calgary, Alberta, we were in top 20.
We were in there. So. Yep.
Yeah, we were right into I think we got knocked out around the second or third last cut, and it went down to 4 or 5 people. But we were in like top 10, and top 10, top 12, something like that. And it was exactly what you said. And our bang for buck right now, what the dollar can get you, our tax environment.
Young population. We've got a good climate here. We're not super freezing cold, and we're not super hot either. And
proximity to the mountains, amenities.
International airport that we've just had put in. So we've there's a lot of good reasons to live in Calgary and in Alberta in general.
Or even invest in business for headquarters.
Yeah, totally. Cool. Yeah, you're absolutely right with that. So I do feel that there's a lot of things to be excited for within Alberta until we start to see this trend of people moving away from these other markets. And I do feel that we will start to see some of that. I'm not ready to tell you that you can use 2.5% to 5% growth rates within your forecasting right now. I'm still going to continue to use 1%. I had been at 0.5, so I'm going to double that to 1% here for this year for my 5-year forecast. But I do feel that we certainly have much lower downside risk than other markets have, and there's a lot of reasons to look at how things could break in our favor near the end of this year.
Fantastic. Love it. Awesome. We're a little bit past top of the hour. I know we started a little bit late, so we really just got this conversation rounded out. Brett, do you got any final words or conclusion you want to wrap up the conversation with?
Yeah, the big thing is with me in the landlording business is plan for longevity within your business, right? And what that can mean. And I did have the benefit of this early in my career, and that's building up a good portfolio of income properties while the getting is good. While there's deals that are out there, while the economy is good for buyers, right, which it is right now. So early this year, anybody that would like to have more real estate, more good income real estate than they have right now should be doing what they need to do, having the right conversations with their existing banks, talking to a mortgage broker, talking with a good realtor in your market to get knowledgeable about what does cash flow and what doesn't, and position yourself to go and put together a good portfolio before we end up in a mainstream, well-acknowledged, strong market, and you're competing with everybody and all the amateur investors come out of the woodwork, right? So you have an opportunity now as a member of this forum to get a head start on all of that, get connected to the right people that can help you do that. And I think you'll be rewarded for it, not only in 2021, but after that, because I do feel we have better days ahead.
Fantastic. Well, guys, thank you very much for tuning in. Brett Turner, as always, thank you for your time and the insights. I think it's a fun conversation we don't do too often. Maybe we can make this something regular once a quarter or something. But
sure. Yeah,
just kind of reading where we're at the market, what's going on. Give confidence back, because I did see a lot of trepidation. I saw some posts on the group where people were concerned, should I get out of the market, what's going on? But when you look past the headlines of what we talked about, and you kind of see from an investor perspective, we are sitting quite good. And I would actually say COVID negative versus positive effects actually did more positively for our rental industry than it did negatively, because it scared people back in the rental market and increased our demand while the supply stayed the same. So yeah, great information as always, Brett. I loved it. We'll have you guys on, and we're wrapping up our last show of 2020. So
Great.
I haven't said it. Happy New Year.
Happy New Year to you guys too. Thanks very much for having me, MacKenzie.
Absolutely, guys. Take care, and we'll see you guys next year in 2021.
Great. Thanks very much, everybody. Talk soon.